Well, most of the equity analysts that follow our stock have target prices for Bitcoin, and they're all north of 150. Bitcoin represents a digital transformation of the capital markets, and so the more people know about it, the more they get educated on it, the more companies embrace it, the higher it goes. You can't make any more of it.
Right. That may be all, but in terms of just what you're seeing in terms of flows and whatnot, that would get it to $200,000 by the end of the year.
Yeah, great flows from the ETFs. BlackRock is showing record numbers. Our companies raised $19 billion this year.
Right.
All of it went into Bitcoin. We just announced $217 million of Bitcoin purchases this morning before I walked onto this set here.
Wait, $217 million this morning?
$217 million, just slightly less than 2,000 Bitcoin. Our first buy, and we were the first public company to buy Bitcoin, we bought $250 million of Bitcoin, and that was like all the money we'd come up with in 30 years.
Yeah.
And this was just a short week.
Michael Saylor talks Bitcoin, digital transformation, capital markets shift, and why this future matters. Let's dive.
4 days.
Okay, so can I ask you this? For those folks who are investing in MicroStrategy, or strategy, I should say, as opposed to Bitcoin, you are effectively a levered bet on Bitcoin. That's what this company has become.
That's
Fair?
correct.
Okay, so the question is, on the way up, it would be it's fabulous, right? Because everything becomes, multiplied. What happens on the way down, if there is a down?
Well, a lot of investors, they have to buy equity, and so we offer Bitcoin-backed equity, or they need to buy credit, and so we have 4 Bitcoin-backed credit instruments, preferred stocks. So the ones that are risk-averse, that want the exposure, are buying the credit, like Strike, which has got the upside with some downside protection. The ones that are buying the equity want 2x Bitcoin. They want more volatility, they want more performance, and they see it as a more efficient way to get that exposure. Turns out that 99% of the money in the world is mandated to equity and credit. Most of these professional investors and most of these passive funds, they can't buy the underlying commodity even if they wanted to. We constructed a pretty bulletproof balance sheet. I would say we have a PhD in leverage by now because we lived through the last crypto winter. We went from 6,000 to 16,000. We were buying Bitcoin at 16,000. We used to use senior debt, and we had some margin type loans. We rolled out of that to converts, and this year we really have started to reallocate to preferreds. And preferreds are the best kind of leverage because they never come due. So I think we're fine right now because substantially our leverage comes from preferred stocks rather than from debt at all.
WorldCoin is suddenly stealing the spotlight, outpacing Bitcoin with a staggering 120% surge in just 4 days. The token climbs to 1,730 Satoshis, its strongest level since January, and the momentum doesn't look random. The spark came from 8Go Holdings, which revealed a massive $250 million allocation to a WorldCoin treasury. That bold move instantly reminded many of MicroStrategy's legendary Bitcoin bet, but with a twist. Instead of framing it as a hedge against inflation, 8Go sees WorldCoin as the backbone of its new vision for AI-driven identity and payments. The company even plans to rebrand as Orbs, signaling how central this bet is to its future. Fueling the frenzy further was the appointment of Dan Ives, the famous Wedbush analyst known for his Apple and Tesla calls, as chairman. His arrival injects serious Wall Street credibility into a project critics once dismissed as hype. At the same time, WorldCoin launched its quantum-resistant APMC privacy framework, built with top universities, easing security and centralization concerns. Combine that with a falling wedge breakout on the charts, and technicals now point towards $6.17, suggesting this rally may just be getting started.
I don't think there's a bias. I don't think we expected to be selected on our first quarter of eligibility. We figure it'll happen at some time. There's a digital transformation in the markets. This is a brand new, novel concept. Every quarter, we make new believers. We get more support from banks, from politicians, from credit rating agencies, et cetera. I think that will continue for the foreseeable future.
Right. Yeah.
Can we just go back to the preferred piece for just a moment? Because I think people want to understand, what a leveraged bet this is, but you're suggesting that because it's preferred, it never comes due. How can it be that they never comes due?
If you were using margin debt, you'd never want to go beyond 10% leverage. If you were using bonds, maybe 20, 25% is about the most you would want to do. But if you're selling a perpetual instrument, I borrow $1 billion forever, and I agree to pay you, say, 10% dividend yield forever. The principal's never coming due, right? And the preferred stock, by definition, is a dividend. It's not a coupon. The board has to have the option to suspend it in duress. So it's, practically speaking, possible to take your leverage beyond 20% to 30 or 40% even. But you don't have the kind of credit risk you have when you have a bond or a margin.
Let me ask you a different question. There's a whole bunch of companies now, these sort of treasury companies that are emerging, SPACs and other things, that are trying to look a little bit like what you're doing, right?
We've had 180 companies that have adopted Bitcoin on their balance sheet. We were the first. Most companies are buying Bitcoin instead of holding sovereign debt, or they're buying Bitcoin instead of dividending out their cash flows, or instead of buying back their stock, they're just buying Bitcoin. And so they're actually increasing their capital base. They're decreasing the credit risk in the company. There are a few companies that are going to issue Bitcoin-backed credit. They may do it with bonds. They may do it with converts. They may do it with preferreds. We're the first company to create liquid preferred stocks that represent Bitcoin-backed credit. Companies like Metaplanet will probably issue preferred stocks. They'll do it in Japan, in a yen basis. Most other companies are just going to creep into this by building up their capital base, and they're not going to get into the business of issuing credit instruments backed by Bitcoin.
The idea of a U.S. Bitcoin reserve is moving from concept to planning stage as Congress presses for details. Lawmakers have introduced a bill directing the Treasury Department to produce a comprehensive report on how such a reserve would be created, stored, and secured. If enacted, the Treasury would have 90 days to outline the feasibility, legal authority, custody arrangements, and cybersecurity protections needed to safeguard the government's digital asset stockpile. The report would also need to detail how Bitcoin and other assets would be represented on the federal balance sheet, and whether third-party contractors would be tasked with custody. This push follows President Donald Trump's executive order earlier this year, establishing a strategic Bitcoin reserve, using crypto confiscated by the government to seed the fund. Treasury Secretary Scott Bessent has said the agency is exploring budget-neutral ways to build it further. Congressman David P. Joyce, who introduced the bill, argues the effort ties fiscal responsibility to national security while embracing new technology. The U.S. isn't alone. Kazakhstan and the Philippines are weighing similar reserves, joining over 517,000 BTC already held by governments. The race for strategic crypto stockpiles is officially underway. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoinzilla for daily news, all for free. That's all for today's video. Until next time.